Hello, everyone. Welcome back to the channel. Today, I have a special guest coming to us from Flux. His name is Daniel Keller. He's actually the co-founder of Flux. Welcome, Daniel.
Anthony, it's great to be here, man. Thanks for having me on today. And I really appreciate you working around my crazy schedule.
No problem. Thank you for taking the time. So for those that don't know, I'm going to preface the conversation with describing Flux. This is straight from the white paper. Flux is a comprehensive suite of decentralized computing services and blockchain as a service solutions. The ecosystem consists of the following: Fluxnodes, FluxOS, which is a cloud operating system built on top of Linux, the Zelcore self-custody multi-asset wallet, and a suite of blockchain applications and tools. And finally, the Flux blockchain for on-chain governance, economics, and also parallel assets, which is really interesting, which help to provide more interoperability possibilities with other blockchains and DeFi access. So the self-titled native asset of Flux is a fairly mined ASIC-resistant proof-of-work cryptocurrency that acts as a utility asset for onboarding to the ecosystem and powering the transaction of information across the ecosystem. The asset also acts as the main incentivization for operating a Flux node, which is really important. It can be obtained by GPU mining, trading on exchanges, and as rewards for operating nodes. And yeah, finally, for governance, to fulfill the vision of a decentralized future, the team behind Flux has provided the community with the necessary tools to participate in the decisions that will affect the entire ecosystem through XDAO governance. So Flux is community-driven and open source and doesn't answer to legacy financial institutions, big tech companies, or venture capital investors. So I know that was a mouthful.
I know, I helped write it.
Okay, perfect. Perfect. I got through that mostly without any kinks. So, first question right off the bat, as a co-founder of Flux, why was this project created? And what's the story behind this creation?
Well, I mean, I think you'd have to be living under a rock not to understand why it was created in terms of, big tech and really honestly, the use that they have of our own private data. So, right. I mean, the reason why Bitcoin came into existence was somebody was doing something wrong and Satoshi Nakamoto called it out and gave us a different way. So, Flux is the exact same thing. As we sat down in like 2018 and we started looking at how we were going to build this project out, we identified like several pain points of technology, the standard technology stack, not just necessarily crypto. We didn't want to just be another fork of a fork of a fork of a fork. We wanted to be something unique. And we looked at decentralized compute. That was Web3 before Web3 was cool. We were decentralized compute. Now it's called Web3. Or if you listen to Jack, Web5. Or if you listen to the other guys, Web6, Web7, Web8. It's amusing. But really, honestly, what we wanted to do is put the power of your data back into the hands of the people. So, you had big conglomerates, AWS, Microsoft Azure, some of these big players. They really controlled everything and they really centralized it into, a few colo data centers. And, they were monetizing it, harvesting it, using your data. And we didn't like that. So that was originally one of our major things. The other area that we looked at, so that was a pain point when we wanted to develop that out. To do that, we had to create this whole suite of applications that supported it because, as you're building these things out, you're like, you don't know how much centralization there really is in the world until you start to try to build something that does the exact opposite. So for 25 plus years, I was, in my career, I was working on bringing everything home. Everything has to be in your data center. You have to have control of your data. And along comes the cloud, 10 years ago, 12 years ago. And it's like, okay, now we're going to take everything and we're going to put it in the cloud. Well, what is the cloud? Where is the cloud? Why? Who has my data? And, so on and so forth. So we wanted to make sure that this was an iterative technology. We wanted to make sure that people could, the people ran the project. And it wasn't, the creation of this project wasn't about money for us. It was about changing the paradigm that was big tech and what they were doing. So the second issue we aimed to solve was one that Satoshi Nakamoto actually pointed out himself, and that was the use of compute power. So, you have all these nodes and all these miners running, consensus mechanism and blockchain validation, so on and so forth. That's wasted compute. And how can we use that? So that's kind of what spawned proof of useful workforce, which I'm sure we'll talk about in this later. But we wanted to make sure that we could capitalize on the node use and use that for useful work, which we have done. And we also want to identify the opportunity to capture those miners as well, and be able to use their compute resources for the greater good. So that was some of the things that went through our head while we were putting it together.
Right. In today's world, 2022 era, proof of work gets a really bad rap. It's very misunderstood, because maybe proof of stake in some cases can just be easier to implement.
Or as we have found out in the past several weeks, easier to kick their ass. I think proof of work is proving its value right now. We watched Luna collapse. We watched all these different proof of stake models collapse. Watching the collapse of ETH right in front of us, moving to proof of stake. When you generate nothing out of thin air, right? Just because you put your word behind it, that's fiat, right? Faith of the United States government is what backs our currency. That the whole reason blockchain was developed was to bypass having to trust a centralized authority who's saying, hey, yeah, we're good for it, I owe you, right? And honestly, I think proof of work is quickly showing its worth and its value. We're cool again, right? Because we got to get back to basics. We've got to get back to proof of work. We've got to get back to blockchain development. We've got to get back to layer 1, layer 2, and building these platforms out that don't rely on shitcoins to run them. That's just factual.
Right. Well, I'm with you on that. Can you talk to me more about the ideas behind proof of useful work? How is it that it is more useful than, the pioneer of the space, Bitcoin's proof of work?
So what Satoshi Nakamoto talked about in detail was the fact that as the Bitcoin network would continue to scale and ASICs would come on board and so on and so forth, the compute resources behind it would be exponential, which we're seeing. So proof of work, most of the time people relate that to Bitcoin for obvious reasons, right? Because that's the king of the castle. And I would say the majority of folks that are the entry level investor, they don't understand the difference between being GPU and ASIC or being GPU positive, ASIC resistant to ASIC mined assets, right? So as we set in, really that's what spoke to me early on was, that major problem is how do we use those resources for something other than transactional validation and just basic consensus mechanism of the blockchain? And that's where we started looking at what really got us into proof of useful work was masternode projects. If you go back to about 2018-ish, 2017-ish, masternode projects were on the rage, right? You staked a bunch of your asset, and then you got some ridiculous ROI and everybody was doing it, and then you ran these nodes. And if you ran the nodes, then you got and it all collapsed, fell flat on its face. But in that, like a phoenix, right? We dug through those ashes and we found the technology that would work, and we created our deterministic node set, which basically, if you're not familiar with it, to run a node on Flux, you have to be pretty damn good to do it. You have to be a decentralized systems administrator. You have to meet criteria for running a node, right? So it's got to be useful work. You can't run any shit box and expect it to, play on the network. It has to pass benchmark and everything else. And we saw proof of useful work really start to flourish when COVID hit. And we had built out this massive node network, and we said, what are we going to use it for? It's kind of sitting idle or very, very little stuff running on it. So we were in a meeting and I said, hey, let's deploy folding at home, right? Which is mapping proteins for the COVID pandemic that was happening right then and there. And the CTO at the time says, and then the co-founder today says, he goes, let me think about that and I'll think how to do it. Comes back 24 hours later and we're deploying it across all of our network and we're folding instantaneously. That's proof of useful work, man. That is exactly what makes Flux so unique and so powerful is the fact that, you know, we're using compute resources that otherwise would have been just trashed resources, you know, and we're actually putting it to work, making it work for the people.
I see. There's a lot of questions I need to ask you.
That's why I'm here. I don't have any time set, so you're good. Ask away.
Okay. So I'll go in no particular order. A lot of people fail to understand the difference between nodes and miners. First of all, in most cases, there are no monetary incentives for running a node. It's more of a feel-good thing that you're, hey, I'm helping to.
Oh, in Bitcoin, right? Yeah, you're talking about Bitcoin. Yeah, right.
Yeah, in Bitcoin. For example, in Bitcoin Magazine, they have an article saying 6 reasons why you should run your own Bitcoin node, and none of those reasons include monetary incentives. Why do you feel it's so important to incentivize node providers on Flux in similar manners to those usually reserved only for miners? Because the block rewards are split 50-50 for those that aren't aware between miners and node operators.
Well, I'm a factual kind of guy, and I call it how I see it. Without monetary incentivization, you will get a small group that are intrinsically working for the project, and they would run the infrastructure at a loss, or they would do it to support the community. But for you to be able to scale appropriately, to be able to develop the project appropriately, you need to have some incentivization inside of that platform. And that's why we looked at our node structure and we said, look, there's really 2 sides to every single blockchain project out there. And that is the proof of work side, which is our GPUs that are hashing away, validating the network, consensus mechanism, you know, transactional validation. And then you have the node side that's doing transactional validation. 2 very unique and different things. But for many years, they were lumped together as this is blockchain, right? So you have the chain, you have the node network, they work together symbiotically to basically secure the network. Yeah. We looked at that and we said, you can break these into 2 different things. You know, yes, your miners stay here. They're GPU, ASIC resistant, FPGA resistant. We're going to keep making sure that decentralization is our focus, but we also want to build out that model for the node structure so that people that are deploying the infrastructure, because remember, we're asking for enterprise-based infrastructure here. We're not asking for some old computer you had sitting under your desk for 5 years, unless it was a really damn good computer. You know, so for us to ask that, we had to figure out a way to incentivize those individuals to be able to participate in the network and scale appropriately. And that's exactly what we did. We divided our block reward 50-50 for our miners and our node operators. We also instituted our node incentivization program, where we partner with other logical projects in the space that want to be more decentralized to incentivize and reward those node operators as well. So that, you know, we're continuing to build out that model and develop it. And, you know, we're all here for the right reasons, right? We're all here because we believe in decentralization, but being incentivized and making sure that you remain here, participating in even a bear market, which we're seeing now. We're straight out bear market. Flux continues to develop perpetually because it's laid that foundation so that the community and other individuals are part of the business model. So now we start to see standard tech stacks that want to come in and look at deployment on what is Web3, and this is a great way to do it. And you incentivize those folks on the onset. And it also gave us the opportunity, because we rewarded those node operators as we were mining, you know, the block reward, they were already incentivized and have paid for the network, which allowed us to create a Linux distribution model of FluxOS. What does that mean? Charging damn near nothing for deployments. I mean, you can deploy a website for under a half a Flux, which is, you know, right now 20 cents. You know what I mean? So our goal was to make sure that we got as many people involved in the project as humanly possible. And to do that, you need to incentivize them. Most of the individuals that run our platform are very intelligent. And I'm not just saying that because it's our, and I would say this to the Ergo community as well. You look at what is the value prop of this project in a bear market, in a down cycle. Am I still participating? And I would say everybody on the Flux side of the world all says the same thing. This is a great opportunity, and we continue to kind of keep growing it. So incentivization is imperative for any project that wants to continue to grow in a decentralized manner. That's a hell of a long question or answer. I'm sorry.
No, I'm here for long answers. It's when you offer me short answers that we have a problem.
Well, you'll find that I don't ever do that. So I like to be thorough.
One thing that Ergo and Flux share in common is that we're in this position that ETH is about to leave the mining business altogether. And while it is ASIC friendly, it also has a giant, enormous amount of GPU miners as well. Yep. Now those miners have to find somewhere else to go. I highly doubt they're going to be playing 5 versions of Call of Duty with 5 different GPUs. They're probably going to
park it somewhere. Yep.
They got to park it somewhere. Well, going back to being ASIC resistant, just like Ergo and many other chains, why was that important for you? Usually the answer is, well, it helps to incentivize further decentralization and to avoid centralizing infrastructure with all these ASIC farms and things that you see. Is that the same reason that Flux went with that route?
100%, man. Decentralization is the way to go. I'm not in this project to build something that somebody controls in the end, right? We're iterative technology, we're building, but everything that we do is under the premise that it will be decentralized 100% when it's all said and done. When we were building a project, we needed two-factor authentication. It didn't exist. What were we going to use? Google? No, we had to build it out ourselves. So we built decentralized two-factor authentication. We needed an autonomous or a self-sovereign ID. We built Zell ID. We needed a multi-asset platform that ran on top of Flux and was able to allow people to participate in many different ways. We built Zelcore. So these are all the linchpins that pull together decentralization. And I personally believe you don't have to be a rocket scientist to see where ETH went wrong. So we know who owns ETH. It's owned by JP Morgan and Consensus and that group. And, the major exchanges hold, 60, 70% of the ETH 2.0. So it's going to be an exchange-based project. I think that anytime you open yourself up to allow people to have massive footprints, I'm all about building infrastructure on top of these platforms, but the core of it all needs to be decentralization ran by the people. So our choice was very early on, as there was ASICs that started to appear on Zcash. We forked immediately and we created Zellhash, which is ASIC resistant. Our goal was to make sure that the folks that were basically helping us build our project from the ground up were incentivized and they weren't dumped on perpetually by people that were ASIC mining. And it really worked well for us. Now, I'm not saying, for whatever projects are using ASICs, if that's in their business model and people are, accepting that, that's fine. I think when you see ETH move to proof of stake eventually, I think you're going to see some big players in the space, such as Flux and Ergo, and maybe even Raven to a certain extent if it has a use case yet. And that wasn't a jab; it's just factual. Come on, guys.
Yeah.
And I'll even take it a step further, Anthony, and I'll even say this: you're going to see false prophets come into the space right close to the time the fork of ETH happens to try to lure hash power onto a new project that's being put together behind the scenes. And if you follow the bright and shiny, you're going to get wrecked. So just remember that. So to all my miners out there that are listening to this, do your due diligence. Look who's building these projects. Look at their history. Look at their reputation, and make damn sure it's decentralized. Because if you're just chasing another shitcoin, that's no good. If we've learned anything from the past 3 weeks, month, 2 months, is you have to have a project that has really a solid use case and a developed community. If you don't, people won't hesitate in selling the asset and leaving the position and leaving that project dead. So, I think there are going to be projects like Flux and Ergo that pull. I see Flux pulling the Team Green, and NVIDIA's. I see Ergo pulling the AMD cards for a while. And you know what? let's work together. I have no beef with Ergo. I think any proof of work project that's working on building something, let's do something together. I mean, I can see Ergo being a parallel asset on Flux at some point. Anyone that's working to champion decentralization and help to push this forward, I'm all about it. And I think that a lot of people in the community would agree with that as well.
Yeah, you bring up a few interesting points I want to touch on. Yeah, looking back at the previous month or so, it definitely feels that this kind of boom and bust cycle is not sustainable in crypto overall. And good projects are ultimately at the mercy of those bigger market caps above it, even if they're consistently building. It helps to show resilience when you have a community of people that aren't looking only for the monetary gain when they go on a Q coin or they go somewhere else. Because if they do that, most of the time, just like normal trading and stock markets or whatever, you're most likely going to lose because you're doing things based on emotion and how markets are shifting versus looking at the principles and actually what is the utility of the asset behind it. And that's another thing I think you were trying to touch on, like Ethereum Classic, Raven Coin, whatever forks come out of this really ugly transition from proof of work to proof of stake with Ethereum. A lot of, not to slap any protocol in the face, but a lot of proof of work GPU mining cryptocurrencies are their use case is parking hash rate in order to get some sort of profitability. We see that it's not sustainable. You have a bear market, everything goes down. So in order for you to pick the right winners, it has to be coming from a place of utility. Well, what can I do with this native asset versus I think because the next halvening that'll happen on Ravencoin, I'm going to see that go to 20 cents just because, and God bless Ravencoin, but when they did their halvening or their halving earlier this year, everything actually went down after the halving, but in anticipation to it, everything went up. That kind of speculation is kind of the plague of the larger DeFi community. We're all trying to escape, as you said originally. Satoshi Nakamoto had an idea to escape what was being done in the real world, right? But now DeFi is kind of riddled for the most part with protocols and things like that seek to print money out of thin air anyway.
Yeah, it's a micro replication of where we're trying to fight against when we started to develop infrastructure around Bitcoin. I mean, that's what it is. People were paying $1 million for a fucking JPEG, man. I mean, Nifties, DeFi, all these different components. The froth was absolutely astronomical. And, I say this all the time, I say it to my community too. This is the most expensive education class that investors are going to get in their entire life, because some people will lose everything,
right?
Everything, because they follow these false prophets. They follow these 10,000% gains, these ridiculous things. There are all these, even the node projects out there. You have to buy an NFT to stand up a node, which isn't really a node. It's it's a API call or whatever.
Yeah, a placeholder for centralizing entity.
So honestly, and I feel bad. I will tell you, Anthony, before I say what my next statement is, I feel bad for the individuals that lost their money, but you can't say you didn't know it. You can't say that people weren't warning you. We were pissing in the wind, telling people, look, this is a problem. When you see NFTs going for $1 million, $4 million, and you see these DeFi projects giving you 15, 16, 18, 20, 100% ROI, APY. I mean, it's not realistic. So we fell in, this entire ecosystem fell into the groove where we were looking for the quick buck, right? And basically what it was people just recycling their assets, right? I'm going to chase this today. I'm going to go get baby Shiba Inu Dogecoin, and then tomorrow I'll go get Ethereum Lite Classic fork, whatever, and then you were playing these back and forth. So the money stayed in the market. It was just jumping from project to project, and along comes Luna and the attack of algorithmic stable asset, and all of a sudden you take that out of the equation. Now the things start to collapse on themselves, because that's the very first time that I would say the majority of the people that are in this space for the past first 2 years are going to see what a bear snap really looks like. And it's going to wreck a lot of people, So I would say this: if you're out there and you're listening to this, you put your investment in something like proof of work, where people are actually putting work into it. They're not creating it out of thin air. Let's go back and look at, Terra Luna and the stable asset. It was an ICO, so they created it out of thin air. They backed it with a token that was created out of thin air, and it became, it went away out of thin air. So, I'm not poo-pooing on people, but we need to understand, we need to be better. We need to do better for our communities. We need to do better for decentralization, and we need to do better for blockchain as itself, because if we build legacy Web 2 based infrastructure and we call it Web 3 or we call it blockchain, it's not. And people fall into this shit, and they're going to continue to keep getting wrecked. So it's a very expensive lesson that many people have learned over the past few months. And I'm sorry to see it happen, but for me, I don't even pay much attention to it. Why? Because the projects that I hold near and dear to my heart, Flux and some of the other assets that I have, I don't give a shit. I invested in the project, in the people, in the communities, and I make sure that I'm very comfortable with that. And I sleep very well at night thinking about that. I work hard every single day to make this project the best thing that it can be, and the rest just comes together.
Right. How do you feel about the future of DeFi as it pertains to government regulation? Not only is decentralization one of those first principles, but is one of the things that can help protect your business, your native asset, your blockchain from being deemed a security. How confident do you feel like Flux will never be deemed a security because of the way you organize things from a decentralized manner? And how is it that blockchains can kind of learn from your experience? And how can you have a team still helping to manage the project while still keeping everything decentralized for the public?
Well, that's a hell of a question.
I know.
Yeah, it's a good one. I mean, it's a very good one. So Flux, when they, as we built this project out with decentralization at our heart, we knew that we'd have to have a team of like-minded folks. And I would say all the individuals that develop on the Flux platform are all motivated by the exact same thing, and that's to build something better that we can hand to our children, to give them some semblance of privacy, security, autonomy. And they're not getting that now. It's just getting bigger and bigger and bigger. I mean, Oracle just purchased Cerner. All your electronic medical records are going to be in one centralized database somewhere. Are you cool with that? Because I'm not fucking cool with that. So, those are the kind of things that we need to look at, and Flux put all the pieces together, all the components together to make sure that wasn't going to happen to us. So, I think that allowing these projects to flourish, these DeFi projects to flourish. So first I'll back up and I'll say this on the regulatory front. So I believe you're already seeing the beginnings of the regulatory arm coming down. Coinbase just laid off 1,200 employees. Why is that? Where did those 1,200 employees come from, and why were they there? Have you looked at what they were listing lately? And I'm not a conspiracy theorist, but I'll get my tinfoil hat out for a second. If you knew that these tokens, these assets, these securities were going to eventually be banned, and you were in that business model, wouldn't you list the shittiest of the shit coins that you could find to make sure you moved your bags immediately? Well, that's exactly what they're doing. And you're seeing this replicated over different spaces, and it's happening right in front of us. What happens the day that they come out and they say that these unregistered securities can't be listed on centralized exchanges? What does that look like? What's your business model as a centralized exchange look like? Not much. And proof of work is pretty damn sexy then. And you'll find every proof of work project that you can put out there that has been deemed a utility asset. And Flux has been tested 3 times by 3 different areas. We pass the Howey test every single time. And we are 100% utility And why are we a utility? Because we baked Flux into every single component of our ecosystem. Every one. Doesn't matter what it is. If you want to launch a node, you need Flux. You want to launch a dApp, you need Flux. You want to launch an Oracle, Flux. If you want to participate with Zelcore, Flux. If you want to go through parallel assets, Flux. So we didn't create another token that we said, hey, this is our governance token and this is our asset, and you really don't have a utility out of your utility asset. No, we baked it all in there. And by the way, we have an excellent legal team that's helped us along the way. So to the next part of your question about the team has an ethos to all be very decentralized. If you look at the individuals that are working on the project, they're spread far and wide. And if Dan died tomorrow, Flux would go on, right? And that's what you have to look at. If you are so dependent on one particular person, Vitalik, that basically helps build out your project, you're not decentralized. I could go away tomorrow and Flux would still keep rolling. And that's the glory of really building a community-based project. And we also make sure we have a different type of ethos. Everybody that works on the Flux project makes one commitment when they come on board, and that is you work on nothing else. I don't give a shit what you invest in. I don't want to see it shilling it or anything like that. But your project, what you work on, what you believe in is Flux. And every single person on the Flux team, every one of them has made that commitment, and every one of them is tried and true with that. So I think it needs to be laid out very early as a project is developing. We're seeing all these new projects coming from the KDA ecosystem, like KD Bet and KD Launch, and all these different ones that are just popping up on the radar, and they all have one initiative. They want to be decentralized. They want to launch on KDA. They want to run on Flux because that makes them, Cadix. Look at what Cadix is doing. They're going to be the very first decentralized exchange that is born into a completely decentralized world. They were built on KDA, Kadena. They were running on Flux. There is no middleman. If AWS decides to shut that shit down, wouldn't matter. It's running on Flux. So, this is all iterative tech, and I believe there will be regulation that comes around that. And I will tell you this, Flux isn't about, being anti-regulation. We want to make sure that people can deploy things effectively. And as a matter of fact, one of the things we just deployed was geolocation on our network. We wanted to make sure that folks that had to have a particular regulatory compliance to their project, that they were able to deploy decentralized, but also keep it in their region that they're building in. So those are the really finite things you have to think about as you kind of move forward. But it all comes down to this, decentralization, rock solid business plan, a team that is dedicated to develop the project, but not unbelievably incentivized by it, right? So Dan got all of his Flux by mining, running nodes, doing whatever I could to continue to keep building my position. I didn't get, 20 million Flux just dropped in my wallet and said, hey, here you go. As a matter of fact, the only Flux that the core team took was 400,000 Flux each, and we were required for 5 years to run nodes on those as we began to scale. So, and we share that because that's fun, man. Like that's important. So all the folks that are building on this project, they're doing it for the right reasons. Every single one of the people that are on this project are running nodes and mining at the same time. So for them, it's all about, giving something back, creating something greater than what we would have had.
Right. What is the token supply for Flux, if there is one, for people that may not be aware?
Yeah, max supply is 420 million. 420 million. So there will never be more than the max supply. So we're not an inflationary asset model that has no cap like ETH. You know what I mean? That essentially they could print as much as they want, which really it's worked out great for the economy so far. We believe in being able to develop inside of that economic model. We don't burn or manipulate the economic process. We don't make people stake their nodes for some ungodly amount of time. You can set a node up, and 5 minutes later, if you change your mind, you can take it back down again, and your assets never left your wallet, which is super important. So yeah, I mean, this is I would say this, if you haven't checked out our tokenomics, we have, in my opinion, the best tokenomic structure in crypto. And I'm not talking, bad on any other project or anything. If you look at there was no token, there was no VCs, there was no, major investors, there was no, massive pre-mines that were given to the founders. There was a foundational component that was developed around that as well, which has helped us develop for the past 4.5 years. We didn't pass ungodly transactional fees down to the people that mined and ran nodes. We wanted to make sure it was as inclusive as possible. You do these things, and and Flux has done these things, and that's why I believe that we've been very successful to up to date.
Right. What will happen after you reach that supply cap in terms of how the native asset is used on chain? If there's what will be the incentives after that?
Well, that's about 127 years away. So I'll be dead, and they may change. There may be a change between here and there. I don't know. But essentially, it works much like Bitcoin, and that is the chain never stops. It'll be transactional validation, right? So these miners won't be mining the block rewards necessarily. They'll be validating the transactions that keep the network running. So, the nice thing about Flux is if you're mining Flux, you're not only mining Flux, but you're mining Flux, you're mining Flux ETH, Flux KDA, Flux Binance Smart Chain, Flux Solana, Flux Tron, Flux, you're mining the parallel assets as well. But the good news is you can always come back home. So if you have some Flux ETH and you want to get back to Flux main, all you have to do is go through Fusion and boom, you're back on the main chain and you're doing what you need to do.
Yeah, that was actually going to be my following question. Could you explain more about how parallel assets work between Flux and other chains, and why that path was chosen for like interoperability and things of that nature?
Well, the holy grail of blockchain is interchain operability. It's to allow you to remain in your primary chain, but also move to secondary chains. And the best way I can explain it is this. You can have dual citizenship. So you can have, citizenship in the United States, and you can have citizenship in Canada. When you're in the United States, you're a United States citizen. You get all the value that comes with being a United States citizen, and you can everything that you need to. But then you jump on a plane and you fly to Canada, and you now have citizenship in Canada, and you get the full benefit of being a Canadian citizen, like maybe socialized healthcare or something like that. I don't know. But so essentially you can always leave and go back to wherever you call home. So in our case, you have the main chain, which is the Flux asset, and then you have the ability to participate in the parallel assets as well. Why is that important? Well, it allows you to work with these different projects and tap into whatever their ecosystem is doing. So it future-proofs the project and allows us to have this interchain operability. And the majority of the chains that we have some level of, if we have a parallel asset and we're working with them, they've already worked with or are working with developing on Flux as well, so that they can all work together. So, for me, when we sat down and we really thought about parallel assets, we thought about how can we bridge that gap? How can we jump from point A to point B and get it to be a more decentralized structure? And we're iterative. It's, there's components that are, being developed behind the scenes that are going to keep pushing it toward decentralization. But being able to participate in those other networks was a big deal. And I think it's really been super valuable for us.
So does every parallel asset have, is that part of the overall coin supply, token supply? Or so it's mirrored in that way?
Yep. Okay. Yeah. We'll never go over max cap. So, but what we did have to do is be able to produce the ability for every. Okay, so say Luna actually made it to, a parallel asset, and it was on its path to be a parallel asset. I was, I was really shocked with a lot of that stuff. And I love the Luna ecosystem lunatics that, really were behind it. I believe they believed in that project through and through. And it was, all the due diligence that we did on it, it was a very good and well-developing project, but it fell on its face. So now what happens if we would have created Flux Luna and it fell on its face? Well, we have to have the ability for them to get out of that asset back home again. And that's exactly what Fusion allows you to do is leave that platform and move back to a platform of preference. Maybe it's not Luna. Maybe you want to do Flux Binance Smart Chain or Flux KDA. the KDA ecosystem is exploding, and it's great because Flux was the first asset there. We were in line to be, listed on Cadix and other, exchanges that were deploying on that ecosystem. So, we're super excited with that.
If like you had Flux on Luna, are you able to change after the parallel asset to another chain? Because ultimately, I have trouble saying that word sometimes.
Interoperability. Took me a while too, man. Don't worry about
it. Yeah. Sometimes it comes out right, sometimes it doesn't. So ultimately, interoperability, one of the challenges is that, you also take on a lot of the security risks from other chains as well in a traditional manner, right? And as you develop bridges, you also need those bridges to be up to the security standards of the native blockchain. So it's kind of like you have to get everybody on the same page. If something was deployed on Luna like a parallel asset with Flux, are you able to sort of change that and use that asset and use it for a different chain later on if another chain were to fall that you guys partnered with out of your control?
So anyone that's in a parallel asset can always come back to Flux. Now, with that being said, you have to do your own research. I can't be dependent on, your investment model, what you're investing in on a particular platform. All I can tell you is that we guarantee your one-to-one to come back to Flux at any time that you'd like. Now, if Luna all of a sudden killed the chain and you can't move, that's a problem, right? So you better be damn sure that you're invested appropriately. And it goes back to the end users. We're not going to babysit you guys. You know what I mean? You've got to do your due diligence. If you're in staking pools or liquidity pools or whatever it is, and they end up going belly up, there's nothing we can do for you. So, we're hard love, from the Flux team, because I make sure that I'm very vocal about it. If you chase these things and you invest your Flux and you invest your time and your resources into a platform that fails, there's nothing I can do to help you.
Yeah, kind of like if you lose your Bitcoin because you forgot your seed phrase. Sorry.
Or leave it on an exchange. You leave it on an exchange. The exchange gets kicked in the face. I lived through Mt. Gox. I know what it's all about. There's been, you look at what happened with Celsius. Man, what a bitch that is. I mean, it's one after another, and I think you're going to continue to keep seeing these because when you create projects that are founded on nothing, you're going to have nothing in the end. So just remember that it isn't always about massive gains, and because if those massive gains end up equaling that you've been wrecked, it was all for naught.
Yeah, if you look up the definition of a Ponzi scheme, it's pretty in line with a lot of DeFi protocols that don't have any real use case. So everything's good as long as the guy behind you gets in line and buys it and all that, and everybody's happy. But the moment you have a big connect scenario and everything, you pull one of those little blocks out of the Jenga tower underneath you, it all collapses.
Yeah. And then what happens is people panic, and the ones that follow, they don't come in as willingly, and that's when it ends up. I mean, so again, a very expensive education for a lot of new investors, and it sucks that it has to be that way, but you can do better. Pick yourself up, dust yourself off. We've all been there. I got my ass kicked many times. So, get up, dust yourself off, and start building your position, dollar cost average, look at projects, due diligence, check GitHubs, make sure that the people are docs and they're real people that are working on your projects and not some nefarious whoever in the middle of nowhere, right? So, if the leader of your project goes on Twitter and tells people to attack his chain, that's not somebody that I would invest with. You know what I mean? So and that's actually what happened with Luna. Is Do Kwon, I believe it was, called out people and said if they were trying to report a vulnerability in the platform that would have prevented this, and he basically said, well, if you can do it, go fucking do it, and they did it. So, that right there is careless. It's not the way you run your project. And when you have a community-based project, you don't have to worry about that. I don't speak for Flux. Flux speaks for Flux. I speak for Dan. I'm a community member just like everyone else, right? I just happen to be in the node just a little bit more, and be very highly motivated. And people say, well, could the world go on in Flux without Dan? Hell yes, it could, because the community would step up, the next man in line, and they would fill my shoes, and that's the way I like it.
So what are there any other potential use cases with sort of the broad scope of having decentralized cloud computing? Could you do other things that the public generally uses today, like cloud storage, similar to iCloud or Google Drive, things like that?
Yeah, well, absolutely. And that's, and honestly, our FluxOS and our node network wasn't developed to run, blockchain fintech. It was developed to be deployed into the major tech stacks. And you see what we've done recently with our partnership with Lumen. Flux is not, we're not maximalists. We believe Web 2 and Web 3 can live together, and people can run Web 2 infrastructure and also load balance to Web 3. As a matter of fact, I think Web 1, which is on-prem, Web 2, which is cloud-based, and Web 3, which is decentralized, I think it's a trifecta. I think all of these will be working together, and I think all of them have different use cases and value adds. If I want something that I can control and has a very centralized footprint, I will deploy on Web 2. If I want to run an autonomous organization and I want it to be very decentralized, I'm going to run it on Web 3. If I want to control my own data, control my own servers, and control my own infrastructure, I'm going to run it on Web 1. So I think these things all work together. And no matter how people like Jack try to shit all over Web 3, the fact of it all is this: you can talk about what the metaverses and the NFTs and the DeFi space and all what Web 3 is. It comes down to who runs it and where it runs. And I don't give a shit if it's Web 69, Web 99, Web 1000, we're going to run it. And that's exactly what Flux was built for.
What is necessary for the overall community, the overall public and commercial businesses to open up to this idea of a decentralized version of an Amazon web service? What is the kind of the tipping point where people actually care about these sort of things
well, I think
on a mass scale?
Yeah, I think they're already starting to care. And I think they already understand why Web 3 will be important, because they already understand Web 2. It makes it very palatable for somebody who's made the move from Web 1 on-prem to Web 2 cloud-based, and having a load balanced redundancy between the two, and then moving on to Web 3, which is the decentralized aspect. And I think you could see people have it deployed in all three of these different platforms. So what's the use case? Well, the use case is the fact that whether you use it as a Web 2 companion where you're load balancing to decentralized infrastructure, or whether you're using Web 3 as your primary deployment, the businesses that were formed in Web 2, the Googles, the Facebooks, the Twitters and stuff, they don't get a free pass to be Web 3. So you're going to get these new projects that are developing. You're already seeing it. And a lot of it's coming from the Cadena ecosystem as well. They build on KDA, they run on Flux, they're decentralized, they load balance, they use what they have to use in Web 2 with a focus of building on Web 3. So, Twitter and these other platforms that have been built, this whole ruse that, Elon was going to buy Twitter and stuff like that, I'd be surprised to see it go through. And I think what he was trying to show was the vast majority of Twitter is bots and bullshit, right? So, I think what you'll see him do is start to lean toward something in a decentralized manner. And so the necessity is here, right? The necessity is today. When you see, whether you like Donald Trump or hate Donald Trump, deplatforming of a sitting U.S. president is absolutely horrendous for free speech. And a tech company should not be making those decisions for who or what you consume in terms of data. And that's why Flux has built this out, is to allow people to have that choice between Web 1, Web 2, and Web 3.
Well, yeah, you highlight a very important situation. I'm not too concerned with the person in question. I'm more concerned with who gets to make decisions on censorship, right? When we go too far in a direction that might be polarizing for the majority of people that are more moderate, politically speaking, in terms of speech, I suppose because the Twitter has built the infrastructure themselves in order to give people a public forum. When you finally deplatform somebody that might have been prominent for better or worse, that is usually that causes people to start to question who gets to make these types of decisions. So
I don't think
it's a
anybody
great,
should. Yeah, I don't think anybody should be
yeah.
making those fucking. I don't know if you can curse on here or not.
No, you
They
could
should.
curse. You could do whatever.
Okay. Okay. Well,
Well, not whatever, but
yeah.
yeah, cursing.
So
Cursing
I don't think.
is not a problem.
Okay, I don't think anybody should be making those fucking decisions. I think it should come to the platform, and you should be able to leave the platform, unilaterally and do whatever the hell you want. And Donald Trump did this somewhat similar. And by the way, I'm no fan of Trump, but I'm not a Democrat. I'm not a Republican. I'm more of a libertarian. So I look at both of them like they're absolutely crazy. But what I want to make sure that I ensure is that they have free speech, and I can consume and understand both sides of the spectrum without it being polarizing and also being filtered, and that's the key. Is we build a platform where if you don't, and this is why Satoshi Nakamoto talked about forks. Well, if you don't like it, fork it, go do your own thing, and people will follow that platform, platforms like Twitter have held that, that source code, that the ability to see what the algorithms are doing and who they are, and who they're affecting, who they're shadow. I myself have been shadow banned multiple times. Why? Because I speak out against Google, right? The Don't Be Evil Again campaign. I got shadow banned. I mean, I couldn't do shit on Twitter for a very long time. And all of a sudden it, came back on and I was good to go. But why is that? It's because you're challenging their business model. And this is where Web3 and Flux and what they're doing is great, is we're going to make a better Web2 by offering an alternative for people to look both ways. So like with Lumen was very forward thinking. I don't know if you know much about Lumen, that about 60% of internet traffic flows through Lumen. They have a massive VPS and cloud provider footprint, last mile delivery. They're huge, massive, Fortune 200 company. And we're sitting on a call and we're talking about what Web3 is. And they immediately, it was like an epiphany, like a light went off when they said, yeah, this is the future of cloud. We have to figure out a way that we can bridge these gaps between Web2 and Web3 and offer to our clients. And that's why they started working with Flux. And that's why we believe in them and work with them. They're not asking us to be Web2, and we're not asking them to be Web3. We're asking us to have that ability for a enterprise-based company, let's say, Uber or Airbnb, or, a massive company that wants to run on Web2, but also have a footprint in Web3. We're giving them the opportunity for that. So, I think that's important. And free speech is what it comes down to, right? We govern in code. And there's nobody making those decisions on what you can and cannot consume. It's an uncomfortable situation because people have been so susceptible to having things done for them, right? You can't see this because I don't want you to see this. It's bad, and I don't want it to be that. We need to start making those decisions for ourselves. And if you want to continue to placate and participate in, censorship and, the truth ministry that, gives you exactly, the info that you're supposed to see, do it, because it'll still be there. But there's a massive portion of the society that's like me, and we don't care about that shit. I don't watch Fox News. I don't watch CNN. I basically get my news by going everywhere I can to see what the actual facts are. So, sometimes I'll watch both of them just to see them fight, flip back and forth between the two, just for fun.
Yeah, I think you're highlighting kind of the importance of not necessarily having a token of value behind protocols, but the protocols themselves. Because there's this misconception, at least in my opinion, that because Bitcoin went up so high, that is why we began as the public to be introduced to Web3 in general. And I think that's really misguided. I think you're seeing a lot of cracks in many different aspects of society. We're in the United States. I mean, that is pretty easy, way too easy to describe what those cracks are. And I think the decentralized nature of pure Web3 protocols that actually seek to make change in the world that we see today, right? Envisioning a future that's better for tomorrow. And like you said, you're thinking generally in terms of your, generations after you're gone. That's kind of the right mindset, because we see how, you could stake this, you could go on Celsius, you could do all of these different things. And at the end of the day, if a native asset loses value, well, none of it matters. Everything just begins to collapse. But the things that are trying to revolutionize the way we work in the world and trying to do the sort of the blockchain of the cryptocurrencies and blockchain of tomorrow, those are the ones that are actually trying to remedy the problems that are systemic in our existing societies. And that's a really big challenge, but that is ultimately the thing that I would say drives the popularity and the attractiveness of a native asset, because the technology behind it is so valuable that, and obviously you want the architecture of the native asset to go into that technology and be basically mandatory to use, because that makes the most sense, right? But that is really what drives the native asset up. I don't think speculative YouTube videos where you have so-called influencers putting a bunch of clickbait thumbnails, I don't think that's progress. And I don't think they're going to be relevant in a bear market when there's nothing to there's no new shiny thing to talk about. So what is your content now?
I posted a tweet today that said, while everybody else was buying, crypto conferences with massive booths and major marketing campaigns and giving away ridiculous ROIs and everything else, what we did was we built and we waited, right? And this is, I believe this is a time for proof of work to shine, especially in this market. Anthony, let me go back and I want to touch on something, because I think what you said was very important. You talked about incentivization. You talked about node incentivization at the beginning, but then you started talking about monetary incentivization, especially for, like the infrastructure itself. How many of us have got one of these phones, right? And we go on there and it's like terms of service, right? For Apple or whatever. And it's like, off we go, right? Well, what if that was split in two? And on the top, it had their terms of service, and it said, we are going to harvest your data, sell your shit, make money, and you're going to get absolutely jack shit out of it. And there's nothing you can do. We're going to know where you eat, where you sleep, where you go to, who your friends are, who your contacts are. We're going to harvest all this data, and we're going to create algorithms that are going to scan your pictures and scan your data. We're going to know exactly what to push into your face, and you get nothing in return. Or you're going to be incentivized for your data. This is a simple educational piece to the folks that are out there already understanding. It wouldn't be acceptable in the real world. Like I call it the real world because it's the tech world and the real world, that somebody, rents your house and they keep the money and you get nothing, but it's your house, right? So, hey, Bill, I saw you guys were gone for a week for vacation. I went ahead and rented your house out, right? And now there's a family living in there. And oh, by the way, I'm not going to give you any of the money. Good luck getting it back. If you try to get them out, because they signed a pretty big lease. It wouldn't be acceptable. And that's exactly what they're doing. They're making their money, their fortunes on the backs of every fucking one of us. And enough is enough. Enough is enough. We need to start reading those terms of services. We need to have people educated. We need to be evangelists of the space and share exactly what it is that is going to be the next iteration of technology. And if you don't think it can happen, it absolutely can happen. It's happening right now. Right now, people are learning. You can't chase high ROIs. You can't buy shit coins. You can't trade shit coins. Your data is valuable. So we're seeing it now. So if you start to create platforms that incentivize those people on a decentralized infrastructure, imagine an Uber that's built on Web3 that has an autonomous network that governs it, governed by the individuals that drive for the platform. You can do it. You can do it today. these are the things that are, that we have to think about, and we're finally, for the very first time, I think in a very long time, once we get some of this greed out of the way, I think we're going to start thinking about these things as what is that next version of technology. And thank God we're all here, people like you and other individuals in the space that are doing it for all the right reasons, because we'll be evangelists of that.
As technology evolves, how do you equate the magnitude of Web3 to the advent of the internet and just overall using personal computers in homes? I'm sure you remember a time where everything was done without the internet, and there was a short period of time, I say short, like a decade, where people were skeptical of why they would actually need a personal computer in their home and what would be the benefit of the internet. And
first of all, you're saying I'm old.
Well, I remember a time like that as well. Okay?
Yeah. Well, I am old. I am old. In terms of crypto, I'm a great grandfather, right?
It's one of the questions that are necessary to ask when people have seen these transitions in society longer than younger people, because this space has, for better or worse, we have it's mostly good, but to every pro there's a con, right? Being young and enthusiastic also means that you're most likely still naive and maybe you don't understand history as well.
Yeah.
So
those of us that forget history are doomed to repeat it, and that's exactly that's very true in crypto, but it's more at a rapid cycle, right? Yes. So about every 2 years, we're doomed to repeat it. It's going to be until we get to the point where we start to educate those users and they start to feel comfortable with understanding how to invest appropriately, because these are tools that were really held for major, Wall Street bankers and people like that are all of a sudden available to normies like us, right? So, I'm running with scissors, let's take it down a notch and concentrate on learning and not thinking that you're going to retire from work because you're a crypto gazillionaire and 2 days later you're broke. So, that just can't happen. And it's us, up to us old heads in the space, like myself, to educate young users, and if you're a member of the Discord, the Flux Discord, they'll see me in there all the time talking shit about NFTs and, hey man, I love your cat NFT, but sell that thing as fast as you can get it sold. You know what I mean? Because this is wisdom and guidance that we all should be sharing. The other thing is if you compare the adoption cycle of blockchain to the adoption cycle, and I'm not talking Web3, I'm not talking, any of the buzzwords, the actual adoption of the blockchain cycle, and lay that over top of the adoption of the internet, it almost is identical.
Yeah, I've seen that as well. Yeah.
So we're you have this bell curve, and it's called the adoption curve. So down here is your early adopters, your technologists, right? We're right there. So people think, well, maybe crypto's dead, maybe blockchain's dead, maybe this technology's dead. It's not dead. If you have now become an early investor, an early educator, that you're going to perpetuate back out to other individuals and train them, so that adoption cycle continues to move upwards.
In terms of the impact of blockchain compared to the early days of the internet, do you see it that's equally as impactful, if not more?
If not more, yeah. I mean, because you really look at it, like I always tell everybody, it's, Web 1, Web 2, Web 3. Web 1, you had your AOLs, your Netscape navigators, your
which
platform.
I remember, by the way. I'm old enough to. I grew up with the Windows 95 and the AOL and the little dial-up.
All right, well then you're in there, man.
I'm in there. I'm in there early.
All right, you're in there.
And then you couldn't use your landline if you were using AOL at the same time. It would be a good way if you were a teenager, which I wasn't a teenager at the time, but it would have been a good way if you were a teenager to go onto AOL, leave the computer running, and then run out of the house. And then when your parents would try to call you at home, they couldn't because the internet was in use.
Yeah. 56K modem. Man. I remember when I first got a one-way cable modem for the very first time. I thought I was king shit, man. Like that was the end of the world for me. Like I fell down the rabbit hole deep when I actually got some speed on the internet. But I believe that what we're in this adoption cycle is, I believe it's going to rival the internet inside and out, because the internet gate was the means, right? It opened up the gateway to these decentralized platforms that would eventually be ran by the people. And, do I believe that there'll be resistance to that? Hell yes, I will. I believe that, a lot of these platforms that are going after major, Fortune 500 companies, I mean, I can tell you, I've already gotten letters from Google. They're not happy with me, right? But that's okay, because what? I don't answer to them. I could give two shits. I'm not going to stop. And in the end, I think when other people stop caring about what these big monopolies, these big massive business models that really dig into your personal data and all your life history, if when we stop caring about that and we start working on a solution, I think that's when we win. And I think it is going to be bigger than the internet, because I believe it will be driven by the people.
How can dApps be imported onto Flux for those that would be interested in deploying on Flux?
You can deploy on Flux today. So we have a project called Project Jetpack, which allows you to basically go through 5 steps to deploy your decentralized application. We use Docker-based deployments. So basically, it's agnostic to code. However you built your platform, if you can Dockerize it, you can deploy it on Flux. We will also be deploying Kubernetes as well. So Kube will also be deployed on Flux, because it's Pepsi and Coke. You get the guys that love Pepsi and there's like Coke is garbage. And you get the guys that love Coke, or maybe it's Miller Lite and Budweiser if it's after 5, right? It really is preference, but each one of them offers a very unique opportunity, and Flux is going to embrace both of them. So you're going to see today you can deploy simply by going through Jetpack, paying your little bit of Flux, uploading to the Docker repository, GitHub repository, making a pull request, and then you're deployed. In the future, I think what you're going to see is, on-demand deployment. You can just go in and immediately just deploy whatever it is, as long as you've met the community guidelines. And I think with Kube as well, I think you're going to see the ability on definitely on our enterprise infrastructure, the ability to deploy to Kubernetes, because we want to make sure we get that business sector as well.
Are there any notable names that you can mention from a commercial standpoint that have already begun to utilize Flux that we would, regular, everyday, traditional companies out there in the world?
None that I can really talk about. Most of them are blockchain and DeFi at this particular point in time, because that's what we've aligned ourselves with as we've continued to grow. But I will tell you this, there are many Web2 based companies, and this partnership with Lumen was a big deal. There was a reason why this all went down, they're very well aware of what Web3 will be, and they're already looking at it as well. So, I mean, we've got KDA, Haven, Kasama, there's all the major platforms in blockchain are in some way, shape, or form, integrated into the Flux ecosystem. And I think what you'll see as we start to roll out our standard tech stack model, which is our goal was to get this last year, get everything ready for our break out of the crypto echo chamber, right? Echo chamber, and into the standard tech stacks. And I think we're doing that quite nicely, as we're doing it right now. But you could deploy game servers, Minecraft server. We run Minecraft servers. We have, TeamSpeak, which runs on top of Flux, which is I don't know if you guys remember Vent, or if you're a gamer, if you remember those things, but TeamSpeak is a big one of those as well. And they're coming out with a platform that's going to compete with Discord. And we'll run that as well. So, I mean, if you want to check out all the applications that are running on Flux, head over to our dashboard and check it out. I highly recommend it.
Do you believe the economic incentives and profitability of a company long-term would be better using Flux? Like what would you say would be the major driver for people to abandon AWS and use Flux and, from the traditional landscape?
Well, if you deploy a server, a conventional VPS server on AWS, and you use our entry level statistics for what we deploy on Flux, it would cost you about $138 to deploy that infrastructure. On Flux, it would cost you less than $1. So there's, people can argue about, value prop, this, that, and the other thing, but it comes down to you're either the biggest, you're the cheapest, or you're the best. And Flux happens to be all three in Web3. We're the biggest, largest decentralized computational network in existence, ran by the people, 12,000 plus nodes. We're the best because we've built that platform to be able to court users to come on that, and we're the cheapest. We're the cheapest because all of our community members, miners, node operators, and the folks that put their blood, sweat, and tears into the platform have been incentivized at the beginning so that we can provide that compute resources out at a very low cost, which means if I'm a business and I'm starting up for the very first time, some of my biggest costs are legal, infrastructure, and team. Well, we just took infrastructure out of the equation. So worry on your team, worry about legal, worry about the components of starting a new business, and we can help you do it on Flux much cheaper than you would pay at any other platform.
Perfect. Trying to think. I mean, you cover everything pretty well. It's hard to have a follow-up to that. So long term, I mean, how long can you see yourself doing this? Is there a point in time where you'll say personally, or the rest of the team, like, hey, it's decentralized. We've achieved all the milestones we want in our roadmap, and that's it. I move on to other things in my life, or is this a lifelong adventure?
This is so. I spent the better part of my career as CIO level, senior director level in technology, right? So I spent really the majority of my career centralizing things, right? And now I'm going to spend the rest of my life, right? Because I'm not going anywhere, and as long as I can still contribute to the community and be effective in what I do, I'll be the biggest evangelist for Flux and for proof of work and decentralization that there is. So, and I would say the majority of the folks that are on the project feel the same way. We don't have people that leave the project and fork it and go do their own thing. They would rather create something better internally and know that, the folks that help lead the project. And when I say lead, we're advisors at best. The community ultimately is going to let us know whether or not we're doing the right thing. And trust me, you fuck up, they'll let you know. And that's important, because I don't want to just hear the fanboys out there that are saying how great Flux is. I want people to be critical. I want them to ask questions. I want them to be part of the process of us continuing to iterate this technology. And there's not a lot of people out there, not a lot of founders out there that would say, I want the input. I might not like what I hear. I might get, I've had people personally attack me and things like that. And that's fine. But in the end, it's all about, the project. It's all about developing the project and handing it off to the next generation. I see people in our community that I know will be the next man up. When Dan is no more, they will walk into it. We have young, talented people in that that have been there for a very long time, and they're ready for their opportunities as well. So I think that's what it comes down to. If we stop being tribalistic, if we stop running away from projects instead of incentivizing and building on them, right? That's when blockchain becomes successful. And, when we as a community, and I say we, meaning blockchain as a whole, when we stop shilling our bags, stop talking about, we're the best of the best, and start combining forces to work together to advance blockchain, that's when we're successful. And you're already starting to see it. I mean, the relationships we have with Cadena and their group, we have a very strong relationship with the Solana folks. I'm not a huge fan of proof of stake, but I do like what they're doing with some of the pieces of their project. That's a big deal. The Haven guys, they're doing some really cool stuff. Every one of these projects that we're working with all bring a solution to a problem. So they're not looking to create, we can do it better because our block size is bigger, or we could do it better because we have a different team. It's how do we build these things out? I can have my individual project, but I can build on Cadena, I can run on Flux, I can, bring other people in the ecosystem, and we're all working together. So I think that's the key to all of this is for us to just stop being tribalistic, stop shilling our bags, stop shitting on everyone all over the place, and work together. Because if you work together, in the end, you win.
Yeah, I often talk about the fact that we live in a world where money has been warped from its core values, and that to the extreme, right? Money is a byproduct of labor or a good service. There has to be something backing it and offering it value. And when I see a lot of the DeFi platforms out there that only thrive in a bull market, it kind of undermines everything that they're trying to accomplish, because money was the primary motive. Now we're beginning to see there's no coincidence why Celsius and all of these other things are falling apart, because Bitcoin isn't helping to carry them on their back upward. Or the global financial system is not helping, giving the crypto industry a break, And that's one of the things I think is very important that you touched on, that ultimately you should be focused on building a superior product to what's already existing, or a service,
or solving a solution,
solving a problem that needs to be solved.
Yeah, giving another version of what already exists isn't fucking solving a solution, right? It's just creating more bullshit that people are going to fall into, and that's why that's what Flux really has set out to do, is solve solutions, right? So you look at fintech, DeFi, whatever you want to call it, right? And that's not necessarily a problem that they wanted a solution for, right? So they've resisted us every step of the way. But step out of that tech sector and you step into someone like EMR, electronic medical records, or supply chain management, or asset control of asset, escrow. Those pieces are all begging for someone to step in and make them more efficient. And that's where we need to get out of this mindset of like blockchain is all about finance, and blockchain is all about technology. And that's exactly what Flux is setting out to do. So, we're working with the University of Geneva in Switzerland around proof of use of work. We're going to go to education centers all over the world to build this thing out. We want to make sure that it makes sense across the board. Instead of spending all these resources in marketing and PR and just, shilling your project, put it into business development. For shit's sakes, come on, man. Like, I would say that was our biggest concentration in Flux. We didn't do any marketing other than organic for 3 years till we built the product. And when the product was ready, then we started to market it. And that's, we've had success with that because we brought new people to the platform that would have never known about us. Bull markets definitely help that. And there's definitely a lot of attention around Flux now.
Talk to me about your Zelcore, the actual multi-asset wallet. Is that non-custodial?
It is a non-custodial wallet. And if you're using a custodial wallet, don't. Stop it. Stop it. Get help. Like the Michael Jordan meme. Stop. Get help. You know what I mean? Not your keys, not your crypto. And we're learning it big time now. I mean, the folks at Celsius really wish they would have listened to that, and taken it to heart. Non-custodial platforms will be, here's a bold prediction. Non-custodial platforms will be what drives this market into the next 4 years. You're going to see platforms like FTX and Coinbase and Binance start to develop non-custodial platforms that are linked directly to their custodial products. And if you're already seeing, you see Coinbase Wallet, you see, Trust Wallet, you see these different platforms. Zelcore does not align with any of these exchanges. They don't give a shit. Whether you're using Binance or Coinbase or whatever it is centralized, you can still use it inside of Zelcore. So we have API aggregation where you can plug your exchange keys in and you can trade inside of Zelcore. 400 plus native assets, gazillion, bazillion, trillion tokens that are floating all over the place, and you control all of it. Even nodes and deploying nodes, you maintain all of your assets. Putting your assets in the hand of someone else is pure suicide, especially in these types of markets, because you never know who's going to be the next domino to fall.
Right. One final thing about the XDAO. Can you talk to me more about governance with the DAO and the community, how that functions, what type of governance infrastructure you guys have laid out for a community? Go over and just kind of take with that DAO.
Yeah, so we're in our first iteration of our DAO. So, you have to kind of separate from what the definition of other people's DAOs, where they're kind of like these autonomous organizations that are tied to the asset. Our XDAO is really, if you run a node, it's a weighted average for voting for anything that comes across the platform. You can go there and you can present to the community of node operators exactly what it is that you want to do. In one case, we had somebody build some websites. Another one, we had somebody do a marketing and PR campaign. We had all these different things, and the folks that are in the community are the ones that vote on these things. As it continues to iterate and grow, eventually we want the XDAO to be the complete controlling feature of Flux. So we want to make sure that everything that's done on the Flux platform, not normal everyday operational things. For us to develop, something on top of the platform, we shouldn't have to go to the XDAO and ask for permission to build a fucking dApp. I mean, come on. But if we're going to spend a particularly large sum of money for maybe marketing and PR or something of that nature, then that needs to go to the XDAO for a vote. And the folks that are running the infrastructure are going to be the ones that can participate. And by the way, we're not going to just keep it node ops only. We are going to extend this to miners. We're going to extend this to hodlers, people that are actually holding the asset. So it's inclusive to the entire community. And that is a big deal because we want to make sure everyone has a voice in Flux, because you can't say for the people, by the people, and then let a small majority of the people actually make the decisions. So, our goal is to allow miners to have that right to vote, hodlers, node ops, so on and so forth. So that'll be the next version of XDAO as it comes. And we're hoping to have maybe version 2 later this year into next year, around the time we're working on proof of useful work as well.
I have 2 more questions that kind of came to mind. What do you think about Bitcoin's long-term viability?
I think Bitcoin is the king. I believe that it always will be the king. I'm not a maximalist, but I do believe you need a storage of value. And I do believe that one thing that you're going to see and you're going to hear about is people like Jack and Elon Musk, who are going to spend a shit ton of money to build out other components on top of the Bitcoin network. And I'm all about that, because those platforms that they're building out are going to need to run on something. And when they do, they're going to run on Flux. And I believe that. And that we're going to build it so that, they can deploy it very simplistically in a decentralized manner and support the Bitcoin ecosystem. I can't predict the future in terms of technology, but I can say this: it's tried and true. And, and until we see something other than the greed and manipulation of large holders. By the way, I think this whole bear market has been a blessing, because it's taken a lot of whales out of the equation and put it back into the hands of the people, man. Like, my son first words out of his mouth when I saw him the other day was, "Hey, I bought more Bitcoin." I was like, did you? I bought more Flux. Did you? Okay, good. Because that's exactly how you do it. When they're getting wrecked, we should be building our bags and keeping it more decentralized. I think Bitcoin wins it in the end as the storage of value. However, I do believe there are other platforms of value. I am not a maximalist, obviously, because I built an altcoin project specifically around infrastructure. So if you're a maximalist and you're listening to this, get your shit together and start looking at projects that make sense, because you cannot do it alone. If you go together, you will go far. You know what I mean? If you do it by yourself, I don't know what to tell you. I will say this: I went to the Bitcoin conference in Miami, and I walked around on the very first day, which is kind of like the industry pass. Like, you can go to the different vendors and booths,
right?
And it's not open to the public, really. And the one thing that absolutely screamed at me was the fact there was nobody there that was building on the platform. There was nobody there. They were utilizing the asset as a hedge, as a commodity, as an equity. I don't even know. I mean, these projects were building their mechanics around the use of the asset, but there was no one building the technology on top of it. Why? What the hell? Bitcoin people, why are you not building on top of this platform? Why are you not working for the next iteration? Because if you go back in the Wayback Time Machine, Bitcoin Core and Bitcoin Cash and the cash wars and all that stuff tore Bitcoin apart. And I don't think it fully has ever recovered since then. So, I think that you can still be king and you can still be your storage of value. But I think there are going to be projects like Flux that allow you to have that decentralized infrastructure and build on those pieces.
Do you have any competitors in this space currently? Like real competitors, or?
I always say this. I always say Flux doesn't have competitors; they have opportunities. Because I would say, if you look at like some of the node platforms that are out there selling, like you look at the like Akash and Strong nodes and some of these other. I mean, I would say point blank, Strong is a fucking Ponzi scheme. It has been since the day it launched. And anyone that's listened to this, if you have Strong nodes, I don't mean to hurt your feelings, but you better do your research. Akash is interesting to me because I think their technology is being developed fairly well. I think that you could see an opportunity maybe where we stop hating each other and want to work together in the future to continue on. But I don't see them as competitors. We're doing two different things, right? So we're deploying, dApps and oracles and so on and so forth. Then they're doing compute cycles, which could work together quite nicely if you really think about it. ICP, it was absolutely pure cancer, and their development team is and I try not to speak ill of projects, but anytime a project goes from a couple $1,000s down to like, $10 dumped on retail heads. I mean, it's disgusting. I would say this: if you have to buy an NFT to deploy what is a node and pay maintenance cost on it, that's a Ponzi. If you have tokenomics where 60% or 70% has been allocated to VC and another 20% to the team, that's a bullshit project. So look at the tokenomics. Look who actually is invested in the project. Are they VC laden? Because VC is cancer. Whether you like Jack and all the horse shit that he pulled up about Web 5 and stuff like that, he has a point. And that point is this: there are large players in the space who are Web 2 and they're disguising their approach and their business models as Web 3, and they're not. So, I got some respect for the guy. I mean, I think what he's doing, calling him out, is good. So the answer to your question is, I don't necessarily think that we have direct competition. I think we have opportunity abound.
What are a few of the milestones on the horizon for Flux that you could talk about? And also beyond those milestones, what are things that 5-10 years down the line you would love to see done?
Oh man. Well, you're opening the book here. Okay. So, I think one of the big things is our geolocation. So being able to deploy, in particular areas is essential. Persistent storage. IPFS integration and some persistent storage pieces as well are super important. That's all short-term stuff. Like we're talking, the next few months. I'm very excited with the team that's starting to come together around proof of use of work. Proof of use of work isn't going to be a Flux-based project. This is going to be a crypto-based project. We're going to give this to anyone that wants to run it. If you want to participate in, proof of use of work, you're going to be able to do that. So I'm super excited for that. Our labs projects are exploding. I mean, we literally have more labs projects than we can shake a stick at this point. So we're being very particular about who's developing out of labs, because I think that's a representation of our brand as well. And man, they're amazing. Personally, I would like to see a point within the next 3 or 4 years where we hand this over 100% to the community. that we act as basically consultants for the project to make sure, like, if somebody wants a comparison, maybe Lightning Labs to Bitcoin, right? So Lightning Labs, it's its own company and it's developing on the Bitcoin platform. And I think you can see that absolutely as the community as the XDAO starts to grow, the community continues to flourish, and we get the voting rights in the hands of everyone. I would like to see it be, its own animal, its own creature that just runs. And I mean, I think we're there today to a certain extent, but I would like to see, I'd like to see a phase out of any input of any one in particular individual. People would argue and say, well, Dan has a pretty big footprint on this business. And I do because I believe in it and I want to see it grow. But I think it should be separate of what my opinion is and what the project's opinion is, so I should just be another a gear in the cog, or a cog in the wheel here, so
yeah,
I think that would be awesome. I often tell people I understand why Satoshi Nakamoto just disappeared. And I'm dead serious when I say this. No, I'm not going anywhere, but I understand why, because him disappearing and letting it into the hands of the community to develop it out actually ended up being a very good idea, because they didn't go back and always ask someone's opinion on it, right? So if Dan steps down, or we're 10 years down the road and I'm no longer in the picture, or I died and somebody else stepped into the role, it shouldn't be their opinion that sways the community. The community should be able to do that themselves.
Yeah. When you develop a decentralized technology, and then you're the guy or group of people, you are ironically decentralizing influence on that technology that's meant to be decentralized. I mean, there's no perfect way to disappear, but I think anonymity and all that would be, I think that would have been the best approach.
Well, I don't necessarily agree with that. I think having a doxed team that is in front of people so they know what they're getting into, I think is super important.
Well, in terms of Bitcoin's case.
Oh, in Bitcoin's, yes.
Specifically it was for Bitcoin, you could go to jail. I mean, who knew what could have occurred early on? Now looking back, you would have been safe after all. Well, there was a time where you had core developers of Bitcoin meeting with, the CIA and other entities to try to figure out what is this actually, and you always run the risk. I mean, but everything beyond Bitcoin should be, you need to have transparency, because otherwise you are insinuating that you have something to hide, because you want to remain hidden, right?
Yeah, don't do anything. Don't do shady shit, and you don't have a problem. You know what I mean? Like I've been in this project for 4.5 years, and I've enjoyed every single piece of it as it's developed up, and as a community member, not just a co-founder, but as a community member as well. So, I mean, I think that's super important that we keep this in the hands of the community. And there'll be a day. You ask what you see 5-10 years down the road, there'll be a day where Dan's opinion doesn't really matter much, that the community has built. If you would have, let's look at Ethereum. If you would have given the miners the option to vote whether or not to go to proof of stake or not, how would that have ended?
Right.
So, once you've built a community and I truly believe we capture a massive swath of miners when ETH goes there. And I believe they need input just as well as the node operators and the hodlers and the other individuals. If you build out an inclusive community, which is exactly what Flux is working on doing and has done, then you don't have to worry about one particular person holding sway over your project. There are no Vitalik Buterins, there are no Roger Veres, there are no Craig Wrights, there are no people that, come out and say, I can do it better, and this wasn't the way that I want it to be done. Well, no, I want it to be done the way the community believes it should be done. So,
hey, one final question. Now that we bring up Ethereum, do you think Ethereum will actually retain that number 2 spot? Or
I don't.
I personally think undermining the community from a top-down bureaucratic way of, hey, we're going to burn some of the Ethereum or the ETH and that's going to come out of your minor profitability. And actually, we're just going to abandon you altogether because we don't really have a good solution for scaling, right? So the cop out is going to proof of stake, in my opinion. But when you undermine all of that trust and almost 10 years of building up this thing, and you kind of develop an ethos of, well, everybody that supports this community is kind of a what is the word for it? A mercenary, right? There's no true belief. There is profitability. There are NFTs. There's first mover advantage. There's trailblazing. But I personally don't believe you can maintain that number 2 spot if essentially you have all these technologies that are grateful that you came in, you gave smart contract programmability to cryptocurrencies, but ultimately that first mover advantage won't last if you don't have a solid foundation of people that actually believe in what you're creating.
Yeah, I mean, I always tell when I explain it like this, because people ask me this all the time. They're like, what the whole Ethereum 2.0 thing is like this. Let's say you're walking on a road, okay, and on the side you come to a massive hill, right, and you have to climb this hill to get to the top to get out, or you got a 50-foot drop cliff that you can jump off of. Ethereum just jumped off the fucking cliff. Right. So they didn't want to put the work in to scale the hill. They went the opposite way. They're going from a well-developed ecosystem that they could have worked on improving. And they've basically isolated themselves from the biggest supporters, which is their miners, makes no sense to me. It's like it was their one tie to decentralization. And by the way, they're a shitty version of Solana. And as a matter of fact, Terra Luna, before the entire implosion of the stable asset, was a better platform than ETH to begin with. So to me, it's like, what are you doing? Because right now we're watching proof of stake get its teeth kicked in, and you guys are still heading in that direction. It's like a slow moving car crash, and you're just watching it all play out in front of you, and it's terrifying. So, I think personally that, I'm not shilling any project, by the way. I don't do that. I talk about Flux, and there are a few other projects that I like that are doing something unique in the ecosystem. I think a project like Kadena is going to win that. They're a proof of work project. They can scale infinitely. They have 20 plus chains, but they could easily have 100 chains. They run on Flux. Their chain web data, their full node runs on Flux for decentralization. They've already tapped into that golden world. The projects that are deploying on there are logical, problem-solving projects, and I think it goes well when you companion. I believe Will said this from the KDA team. He says, if we're the next settlement layer, then Flux is the next AWS, and that's exactly what I think you're going to see happen. ETH, to me, ETH should have died a long time ago, and they're VC laden, ICO. They should have never been deemed, an utility asset. They should have been 100% of security, and how they ever made it beyond that, I'll never know. It is what it is, man. I call it the way I see it. And all opinions expressed by Dan Keller, or Dan Keller's opinions, don't reflect the project of Flux, right? So I'm not an investment advisor. Don't even listen to me. Half the time I'm crazy. But I just don't see it, Anthony. I just don't see ETH holding that. I think there are already people that have already had that first mover advantage in proof of stake. And these guys can't even get, what's it been, 5 years since they first started talking about it, right? And now here 5 years later, we didn't even know that it was going to happen this year till like a couple weeks ago. So, if it takes you 5 years to iterate in blockchain technology, you're fucking dead before you started. So that's just the way I feel about it. And
do you feel there is room for proof of stake, in your opinion? For example, with more responsible projects such as Cardano?
Absolutely. And I believe that as projects proof of stake projects start to deploy maybe their node structure onto a decentralized platform like Flux, like let's say hypothetically, Solana starts to deploy, nodes on the Flux ecosystem, you can iterate toward a more decentralized ecosystem. Now, I can't speak for their financials because I don't like, these are securities, 110%, Sam Bankman-Fried is down in Washington today talking about, regulation. Why is that? Because I believe that a lot of these are going to be deemed securities, and it's going to be not a pleasant, next couple of years as we get through these and sort through some of these. I believe 90% of the crypto projects exist today are going to be dead. Factual. That's how I feel. I mean, again, opinion of Dan, but if you don't have a use case and you basically created a token off another chain and has no value add, you are a speculative asset and you will die. And I think the majority of the stuff that's on ETH is exactly that. I don't think they make that transition. So, yeah, I mean,
yeah. Well,
I think we're interesting times.
Yeah, my personal opinion is if you don't have a long-term survival roadmap to keep people interested in the project long-term, technology will continue to iterate and improve, and value will be the thing that keeps projects afloat at the end of the day, not individuals, not necessarily even regulations. The value that you provide, and value is very hard to provide if you have thousands of cryptocurrencies and thousands of blockchains. There's only going to be a handful of them that actually not only get past the regulatory front, if that's even relevant for some of these that are decentralized, but also just have a unique value proposition that can cater to enough people to be worth hundreds of millions of dollars in market capitalization. That's really hard to sustain if you don't really have anything behind it. And right now we're seeing, it's almost like an overcorrection in crypto or in Bitcoin leading the charge, or in Terra falling apart, because the consumer confidence, unfortunately, a lot of it has to do with speculation and retail investors that don't know what they're getting themselves into. And then when there is trouble, on the horizon, everybody just kind of cops out and collapses. Oh, yeah.
I always put the little GIF of Michael from The Office where he runs out of his office. It's happening. Everybody panic. Everyone panic. It's like, because that's what you get into. So I think it's yeah, go ahead.
No. One last point on that. If you look at all the cryptocurrencies of the mid 2010s or early 2010s that came right after Bitcoin, they're not. If they are here, they're irrelevant. I'm sorry, Vertcoin, Bytecoin, whatever other ones are out there. It's nice to have it in the moment and say we have our own thing, but your own thing. It's not any different from all the other things that are claiming that they're their own thing. You're not adding any value. And, we've already seen in the short time that cryptocurrencies have been around in blockchain technology, how that long-term cycle pans out in a short time frame. And it will continue to happen until you get a lot of the garbage out of there. And consumer confidence will come back. That's one of the cons of being lumped into this category of blockchain technology, is that you have to, unfortunately, share the reputation of the entire space, and not everybody's going to be as responsible or building the same way that they should. And I tweeted about this last night because it was really frustrating. I said something along the lines of, greed is your prime motivating factor in being in this space. You won't be around long term. You may not be around for the next few years, just because if everybody's chasing that, you completely miss the structure underneath that provides the utility or the value of that native asset that you said, well, I don't have any regulations. I could just issue whatever I want. And hopefully our Discord will, get enough people on board. And we see that with NFTs and we're so early on in this space that NFTs are only viewed as for generative artwork.
But the technology, non-fungible tokens,
it's amazing.
And that's like with deterministic nodes. You see the value of the technology and how it's misappropriated or misused, and then you see, okay, I'll let the FOMO and the frothiness and all of that horse shit subside, and then we're going to utilize the platforms. So, one of the things that Flux just did is we christened our very first commemorative, because of Project Titan getting ready to launch. We commissioned a watch Now, why is a watch a big deal? Well, that watch is tied to an NFT that's deployed on the Flux ecosystem, held in Zelcore, and has a QR code that's built into the watch that allows. There's only 250 of them ever being made, so you can't make any more than that. And it ties to a physical asset. So I now have a watch that I can wear on my hand, which is a nice watch too, by the way. Check it out. On our Medium, it's gorgeous. I helped design it, so that's why. But it ties to physical assets. And why is that important? We partnered with a company from Baltimore, Maryland, who upstart company, building a big, a nice micro brand watch, and they wanted to do something different, and we did it different. So what does that bring you? Well, if you have the watch and you own the watch, you will get lifetime access to all Flux events forever, right? So these are putting value to the actual things and helping appreciate them, right? It's built on, let's say someone like Rolex who wants to look at, there's a lot of counterfeits out there in Rolex,
Right.
So if there's a way for supply chain management and you can use non-fungible tokens to tie to ownership, why not? And that instead of GIFs of fucking apes or whatever they are, or pictures of ape coins or whatever the hell it is. So I think the technologies behind these things are going to continue to keep showcasing themselves, but they have to burn the frothiness out of it.
Beautiful. Well, I think we covered a lot. I want to thank you for your time and all your valuable insights. I know you didn't have to do this, right? You told me before we began recording you were on vacation and you're spending time with family. So, we had to reschedule a few times, but we finally got it done. And,
yep.
I really appreciate your time. Thank you so much for coming and, sharing your insights. You have your opinions, of course, are going to clash with other people's, but there's a lot of educational value in that I'm sure Ergo and other blockchains and other people that are in this space right now while we're in a so-called bear market that, are looking for substance, looking for why be here in the first place.
Well, I have a lot of respect for the Ergo community. I have because a lot of the folks that are in the Ergo community are diehard true miners and technologists, and I respect that. And I appreciate you extending the olive branch to sit down with me and talk about another project. Again, we don't compete with each other. We have opportunities with each other. And I think when people start seeing that, you may not agree with everything that I said today, right? I'd say there's many people that are going to be pissed, but you will agree with a good bit of what I am saying. So we can always find common ground. So thank you to you. Thank you to the Ergo community. Thank you to my Flux community. And, if you guys want to find out more about Flux, runonflux.io. You can also follow us on Twitter at runonflux. And if you want to follow me personally, just to hear my unbelievably mad rants of an old man, it's at DAK_Flux on Twitter. Thanks, Anthony.
Oh, thank you so much. I'll put a few of those links in the description below so you guys can, view and can click on them.
Appreciate it.
Thank you so much.
Thank you.
See you guys in the next one. Bye.
Bye.